Welcome to Trade of the Week. I'm Zinati Gama, and this week we dig into Impala Platinum, Northam Platinum and Sibanye-Stillwater for your weekly analysis. And joining us for greater insight is Moxima Gama, Senior Technical Analyst at the Money Hub. Thank you so much for your time, Moxima. Quite an interesting grouping today, the PGM counters that have seen a lot of pressure in their share prices, their balance sheet, everywhere, their revenues. And of course, we know that we have been in this prolonged downward cycle of PGMs. You choosing these stocks for today's analysis, does that mean that you are seeing some sort of bottom?
So, yes, I'm going to kind of describe, it's kind of like a bell-shaped type of chart, which will make sense to you, which will make sense or will conceptualize everything I'm saying, because I did figure that people will be like, are you sure you want to get into this? So it's kind of a cycle. It's a four-stage cycle that the market goes through. So I'm not too sure if it is showing on the...
Yeah. I mean, it's quite interesting because recently, with all the tariff chaos, we actually had seen some good gains on those counters.
We did, but not significantly so. But I'm going to explain something that will probably just make sense with you, particularly with this bell-shaped.
Yes.
And the reason why I am pointing it out now and I'm making it quite conspicuous as it is now is you need to understand how an investment cycle happens for a portfolio manager or for clever money.
Yes, okay, yes.
So it's a bell-shaped type of cycle where you'd start off with the accumulation phase, and that's where a lot of the asset managers or people with huge accounts would then start picking up on stock.
Yes.
Because they can't disrupt the market because they're handling billions. So they have to start cherry picking and picking up on that stock, which comes to accumulation phase.
Okay.
And then once the accumulation phase then comes to an end, starts the markup phase. Right? And then like possibly most of the time, halfway through the markup phase is when the retail clients come in because they start seeing that, oh, this is starting to go upwards.
So let me follow the clever money.
Let me follow the clever money. And then comes the distribution phase. The distribution phase is when the share has reached a peak. And a lot of the asset managers at that point are starting to sell on the high. But as a retail person, you would never know when the distribution phase is, and you thinking this is time to start getting in, when effectively it is not. And then from the distribution phase, and when the distribution phase ends, then starts the markdown phase. And then the whole thing starts again. And this could work through an extended amount of time, like over 5 years. It works over a 5-minute chart, day chart, whatever. But as long as you can follow through with that bell shape, then you'll know exactly when to start coming into the market. Now, remember the last time I was here, we spoke about gold shares.
Yes.
And where gold was going. Thank you very much. It's sitting at 3,000.
Okay, we hear you.
I told you it was going to get there. And now the next probably phase, it's going to go to 3,440.
Okay.
Now this, remember I told you about the third phase in the gold phase.
Yeah.
The gold shares. So the gold shares are pretty much approaching that distribution phase. They're not quite there yet.
All right.
But it is a phase that you need to start. It's too late for you to come in. If you haven't gotten in, then it's a bit too late because then the distribution phase sometimes is a very prolonged sideways movement or it's just a drop.
And it is now the time when people are maybe thinking of selling, maybe.
Well, yes. In other words, you'd be selling on the top.
Yeah.
As it continues rising. If you want to follow the clever money. And now there's a process that is called, it's a relative value or a price divergence. Platinum has really not been doing well in terms of its commodity as on its own because, you know, it's no longer a catalyst for conversions for cars. Cars are just evolving. Now we're getting more into electric cars and the other PMGs that are doing well. So you can't base what I'm going to say on the fact that Platinum Spot is doing well, but on the face that portfolio managers have to always switch. So they will look for shares that are or sectors that are overvalued, and then start getting into the ones that are undervalued. So it's not basically, but although the movement between platinum and shares is very positively correlated, it could also work out that even if platinum is not as in demand because there's a supply deficit, it would start picking up momentum.
So it's not saying anything about any structural long-term optimism that is there. You just basically have to make that up yourself. But right now, your reasoning is not that. It's completely different.
It is very much on a follow what the clever money is doing. And you'll see with the chart. So let's start with the first chart would be Sibanye-Stillwater. And it's very clear at this point. And I'll show you the bell shape. It's so conspicuous. You'd be like, oh, I get it. Yeah. So it's obviously been in a bear trend, and that started in March 2022. So effectively, Sibanye has fallen down by 82%. Right? And I mean, this is from 80 Rand 25 all the way down to, it fell to about 13 Rand 85. And this is from 2022 to date. Sure. So as you may see, with this kind of sideways movement, you can already start picking up that the accumulation phase is potentially starting. As long as it's holding above key support levels, the accumulation phase is starting. And there's the bell shape that could be. So that could be the accumulation phase, which means the accumulation phase is between 23 Rand 20 and 13 Rand 85. Now, these two levels, 23 Rand 20 and 27.40, would then effectively end that accumulative phase and start the markup phase. So
where's that support level?
So the support level at this point, the key support level is at 1385.
All right.
So it's in that sideways band between 23.20 and 1385.
Okay, so it's a band, all right.
So for as long as it's still in that band, it's still in accumulation. Of course, if it trades below 1385, then it means it's going to fall further.
Yes, okay.
You know, but as long as it's in with that band, it's nearing. I mean, it's now at 20 Rand 64. This as of yesterday. It's nearing that 23.20 mark.
All right.
And once it breaches that, we can then see upside to 27.40.
All right.
These two levels make that point a good opportunity for you to start getting in. And I would suggest you wait for those levels to be breached, and so that you're not stuck in that accumulation phase, because it could go on for like years.
Yes, okay.
You know? So the timing is pretty important. From there onwards, we could then see from 27.40, as I mentioned, the accumulation phase ends. We could then see that upside to 34.45. And then to 45.85, in which case that's when the markup phase starts. That's when the retail people start coming in, retail clients, and they start seeing that, oh, Platinum shares are starting to do well, or Sibanye is starting to do well. And that's what pushes up the share price quite rapidly in that markup phase. Meaning it could just complete that 100% retracement to 18 Rand 25. This is a long-term investment.
Yes.
So you need to bear that in mind. And then, of course, the alternative scenario is if it stays between 1925 or 16. Anyway, if it stays between 23.20 and 13.85, it's in the accumulation phase. Don't get in. Of course, as I mentioned, if it trades through 13.85, it means the downside is going to resume, and we could possibly see it go to 11 Rand and 15 down to 16, rather to 6 Rand 95.
And that's not uncommon.
It's not. I mean, if it fell by 82%.
Yeah.
And shares do that. I mean, I've been in the market long enough to see these bell-shaped things happen. So other words, your entry level would be between 23.20 and 27.40.
All right.
And then, you know, if it starts trading below 13.85, it means put the share on ice. But here I'm just kind of showing you the bell shape. So this is from 2018. Can you see a distinct bell shape? And this is where we are now, which is the accumulation phase. Okay. I'll show you in more. You'll see. I've drawn this bell shape so that's the accumulation.
So we're in another accumulation phase now.
And now we're starting the accumulation.
Another kind of cycle. All right.
All right. So let's do Impala now. Impala, also that bell shape has completed that. It actually completed. It started its distribution phase started around 2022. Yes. And we might be starting a next one. All right. So it started in March 2022. That bear trend, that 81% lost value. And it's in the accumulation phase. But this accumulation phase is quite unique in a sense that it's forming these rising bottoms, and Impala is now broken out of its long-term bear trend. Oh. So this accumulation phase is already showing that the clever money or the big investors are starting to pick up stock.
Okay, so basically the accumulation phase here for Impala is at an advanced stage than Sibanye Stillwater.
Yeah.
All right.
So this one could then start the beginning of the markup quite. It's pretty similar to that bottoming out pattern I talked about, right?
Yeah.
But yeah, so it's that, but this is more of the bell shape that you should, and it's something you need to always look at when you invest, because you need to know, are you getting in at the right time?
Yes.
And the bell shape can help you with that. So in this case, the buying opportunity would then be presented at 129 45. It's not too far. It's trading at, as of yesterday, 119.14. I think it's probably even trading closer to that.
Yeah.
It's also within RSI is in that symmetrical triangle rather.
Yeah.
Once it does break out of the symmetry on the upside, that is when it confirms it's a time that you can then get in. But it's important that this all happens when Impala trades above. To round it off, let's say 130. So if you see Impala trading 130, you could start. That would be the beginning of that, the end of the distribution, rather the accumulation phase.
With these rising bottoms, what then would you place as your support levels?
So every time there is a rising bottom, that becomes that support.
Okay, all right. It
changes. That dip, because then it's obvious that's where people are coming in to buy, pushes the share price. This is the price that people are coming in to buy, pushes the share price. So every time there is that dip, that becomes your support.
All right.
Because if there is a convergence and that support is breached, then you know it's the end of that.
All right.
So in this case, this accumulative phase could be coming to an end soon at 130 with potential upside to 139.50, which also gives you that buying opportunity. Then we could see a initial projection or upside to 159 and then 190.70.
Yes.
And above there, that's when that markup is probably going to, that's where I believe, the retail people would then be coming in, because now they're seeing that, this is now in an upside.
Yes.
So it's time to pick up when you could have picked it up a bit lower. I mean, from 190, if you pick it up at 130 to 190, it's a good little time to get in. From there onwards, that markup phase could then lead the upside. I mean, Impala's traded at 309.20.
That's crazy.
It's gone above that actually, and fell all the way to 50. I mean, if you don't learn how to get out in time, you could lose 81% of the value, which is, why are you investing in that case?
Exactly.
If you're going to be there for the long time and still withstand all the way. So you need to be able to get out in time and profit from those. Soon as that distribution phase comes to an end, you need to be out of the shares.
And that's the thing. I think a lot of us also have been roped into this thing that if you are a long-term investor, you just leave it.
You just leave it, no.
And you actually don't look at these phases and these trends and decide when to actually get out.
And
so
you need to learn to get out.
Yes.
Some people are like, what if I sell and if it goes back up? Learn to get out.
Yeah.
And the bell shape actually helps you to tell you when it is a time to get out. And then get into something that's accumulating. That's how you build a good, profitable portfolio.
So you need to be bold in your decisions.
Very bold and take charge.
Yeah.
This is your portfolio.
Okay.
And then, of course, if alternative scenarios, if it starts falling below 106, then it could go down to 87.55. And below 87.55, it means this was a dud.
Okay.
Yeah, just put this on ice and let's keep moving. So that's with Impala. And I mean, if it trades below 87.55, it could likely go to 70.35. I mean,
and
50, go back to that 56.85. I can't even believe it. It's the name of the game.
Yeah, it's really just shocking though how much these PGM counters have really sunk in such a short space of time.
It makes sense. Nothing goes up indefinitely.
Yeah, you're right.
You know what I'm saying?
Yeah, okay.
You have to pick up when it's going to stop.
And if you were in a commodity counter in the first place, you must be able to deal with those cycles. So I hear you.
You know what I'm saying? So let's move on to the last one, which would be Northam. Just pointing out the bell shape. There we go.
All right.
Now the accumulation phase. Can you see? With Northam, it's a bit of its accumulation phase is quite huge. But anyway, you could tell all of the platinum stocks from March 2022 started pulling back. Northam didn't pull back as much. It's also fairly young in terms of its relisting. That was in 2020. So it has only just lost 68%.
Okay.
Not as drastic as the other two.
Yeah.
But it is definitely in that accumulation phase, which is quite stark in this case. You can see it's between 152.90 and 88.25. 159.90. Yeah, sorry.
And it doesn't have those rising bottoms as we saw with Impala.
So it's very flat.
Yeah.
It would be the wrong time to get in, but what I'm trying to allude you to is when it does now breach, particularly trade through that, through this trend line and starts. Let me see if I could go back. Let me just see if I could just go and then go through either the 150 990 or 152.90 earlier entry, then that's when it marks the end of that accumulation phase, and that's when you can then see that upside to about 186. You can reload there as well, and then upside to 1250, and that's when the markup would then begin. That could then send it to about the 280 or 279 level. All long-term projections.
Yes.
I don't want anyone saying, producer said it was going to go.
Yeah, then in 6 months, it's still
like,
an accumulation.
So it has to breach the levels. Just make sure, because there's nothing as irritating as holding a share that's just moving sideways. Because you see the potential of it. You don't know when to get out, but you're just stuck in it, you know? Unless, of course, it breaches a key support. That would be you losing money and you just getting out.
Sure.
So the alternative scenario is that if it trades below 118, it just means it may pull back to about 88.
Yes.
85, which is about a 20% move. I think, if it goes below 118.20, it means just don't be getting in at all.
Okay.
All right. But you see those rising bottoms on the RSI, you can definitely tell that the clever money is coming in. It's very easy to detect when you have the eye and you've been doing this for a while. But if you just look at the bell shape, and not all shares have the bell shape, just by the way, you know, they all have different ways of showing you. But with platinum, it seems to be quite conspicuous in terms of showing that bell shape. But yeah, that's basically it. So the ideal level that would give you that buying opportunity with Northam would be at 159.90, with potential upside to 1250, which is a nice 33, and it could even go, because that's the markup. And the markup then that accelerates, the upside accelerates, and we could then go to that 120, or rather the 280 mark.
Yeah. But it's actually quite interesting, because you look at the plunges that they've taken, more than 80%, more than 68%, but the upside at this point, it's still not looking to cover those levels.
Not at this point, but once, as I said, it's in that distribution phase. But once you'll see when it happened with gold. Gold doesn't have more of that bell shape, but you can. There is a pattern that is formed, and if you look at them, they polar opposites. Gold is up, platinum's down. The shift, you'll see. I mean, we'll be here long enough for you. And once those levels actually go through, I will be I will come through and say, listen, the accumulation phase is possibly over now. Let's start picking up on stock. So that's how we just need to know that.
Yeah.
Because I have met too many clients who get in at the wrong time. And they're like, but I thought it was going to go up. Like, you got in at the distribution phase.
Okay. Well, thank you so much. You've just turned this dumb money into clever money.
I'm here to help.
Thank you so much for that technical analysis. Really, really enlightening. That was Moxima Gama, Senior Technical Analyst at the Money Hub. And that's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.